Ah, boy, I have to go to work. Great. I hate it so much. I hate this job so much, but I have no choice. There's another car wash too, which I am so sick of.
Literally an hour-by-hour effort here at the White House and at the State Department to find out where these folks are and to try to make the effort to get them out and get them back.
That is John Kirby from the National Security Council. Now, President Biden is saying a ceasefire in Gaza can only be discussed after these hostages are released. The Pentagon has sent military advisors to Israel. This would include a Marine Corps general versed in urban warfare. Meantime, Israel's military has again thwarted attempts by Hezbollah to fire anti-tank missiles from Lebanon. Terry Haynes is founder of Pangea Policy. He says the U.S. is consulting more closely with the Israeli government to make sure Israel isn't calling all the shots about the future. They're talking in two sorts of ways. One is strategic, tactical, supportive on whatever military operation Israel is doing, but at the same time, there's a more advisory role about the second, third, fourth steps, what might happen down the road, and kind of what we're prepared to do and may not be. That is Terry Haynes, founder at Pangea Policy. Well, it's been 20 days since the U.S. House has been without a speaker. 9 Republicans are putting their names forward. House Republicans are meeting behind closed doors for 6 hours to hear from candidates. Internal party voting.
Approaching a railroad crossing.
Globally is powered by more than 2,700 journalists and analysts. I'm Doug Prisoner in New York. Ronnie?
Doug, thank you. Well, stick with us because we're going to be speaking with Terry Fast in just a few minutes. She's founder and CIO of Zuma Wealth, and it's just a fascinating market to be speaking to Terry about, particularly this move in U.S. bond yields today and really in the last several sessions. The move index still extraordinarily high. This is Bloomberg Daybreak Asia.
Breaking news first. War in the Middle East.
The death toll continues to rise in the Israel-Hamas war.
Diplomacy takes center stage to try to prevent the conflict from escalating. More trucks carrying aid in the Gaza have been able to make it through the checkpoints.
The question is, what does the news feel like in Israel this time?
It's not just concern about Hamas. It's Lebanese Hezbollah in the north, and it's the Houthis as well.
The latest headlines on the Israel-Hamas war. Today with Bloomberg 960. Context changes everything. In business, service is everything. Cintas delivers what you need to better serve your customers. Whether it's freshly laundered work apparel for almost any job imaginable, tested and inspected fire protection systems, first aid and safety supplies, on-site AED training, or mops and restroom products, stocked and ready when you need them. Better work days happen together. So visit Cintas.com. Get ready for the work day. A graduate with 3 degrees from New Jersey shares NJIT Board of Trustees. He's also a top executive at medical device maker Stryker Corporation and helps recruit top talent from universities like NJIT. If you look at where NJIT students are going, go to a career fair. There are lines of companies that want to get into the career fair. They see those students as practical, innovative. I can tell you for a fact because we hire many NJIT graduates. These students can contribute right from the get-go. The guy who reports to me, who's in charge of all my implant development, NJIT grad. The guy who reports to me in charge of all my robotics development, NJIT grad. They contribute to the development cycle. They contribute to the testing. We have NJIT graduates in manufacturing. We have NJIT graduates in quality assurance. We have NJIT graduates in our computer science. These students are some of our best.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Are you a wirehouse advisor that's looking to break away? Commonwealth Financial Network can help you take control of your career and build your business on your terms. Your clients, your strategy, your time. Unleash your entrepreneurial spirit and choose the growth path that's right for you. Own your future with Commonwealth. To learn more, visit commonwealth.com. Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
America is strong, and today's investments in essential American infrastructure make it even stronger. American Mutual only insures U.S. municipal bonds, providing an added layer of security to improve any portfolio, with guaranteed income that helps investors reach their goals. Be part of building America.
Great.
Better portfolio.
Hello?
Invest at Dan & Jersey.
Hello?
Yes, 20 minutes to the top of the hour, and I am broadcasting from the Interactive Broker Studio in New York City, along with Ryan Curtis in Hong Kong. We had a down day on Wall Street. Not huge down, but the S&P 500 is down another 0.2%.
Why do I have to work with crazy people? Oh, he does not want to understand. I don't want to work with her.
In the Wall Street
She's
session.
terrible person.
Trend, though, on particular
She's threatened me
stories,
twice now. One of them was a death threat. I mean, come on. Well, nobody's taking this serious but me.
Intel processors in PCs. Now, it was a particularly interesting day in the yield space. We had the 10-year yield move down 20 basis points, and that was just in the Wall Street session alone. The 2-cent spread is now at 21 basis points. Busy week for earnings. We're going to be getting everything from Microsoft to Visa to Coca-Cola, and of course, the other stories that we're following include the geopolitical stories and the United Auto Workers Union members who are striking even further now at Stellantis factories. The one in particular that makes the Dodge Ram, which is a massive story for the U.S. markets and for the car makers. It is time now for sports. Let's get Dan Schwartzman.
Manchester United boss Eric Ten Hag says his club is facing a must-win in tomorrow's Champions League group stage match versus FC Copenhagen. United have lost the first two, and with the loss will be knocked out of the Champions League. In Major League Baseball, it's the NLCS currently ongoing in Philadelphia, as the Phillies are hosting the Diamondbacks. Phillies leading the best-of-7 series 3-2. Phillies look to get back to the World Series where they lost last year to the Houston Astros. Speaking of the Astros, coming up tonight, it's the Astros hosting the Rangers Game 7 of the ALCS. Neither Scherzer on the hill for the Rangers, Javier on the mound for the Astros. Houston's looking to get back to its 5th World Series in 7 years, while the Rangers have yet to make it back to World Series since losing in 2011. On Monday Night Football, it's an NFC matchup in Minneapolis, as the 2-4 Minnesota Vikings are hosting the 5-1 San Francisco 49ers. Vikings are coming off a 6-point win over the Bears, while the Niners lost for the first time by 2 points to the Browns. I'm Dan Schwartzman. That's your Bloomberg World Sports Update. Brian.
All right, thanks very much, Dan. The time, 18 minutes here before the top of the hour. We've got a good session here coming up with Terry Spath, founder and CIO of Zuma Wealth. So we want to talk about the violence in the Middle East. We had some good news today with the release of a couple of hostages, but we haven't had a chance to talk about the big drop in bond yields today, so perhaps I'll start off with that, Terry. This left investors a little puzzled because lower bond yields generally would be good for equities, but then for all the wrong reasons, people like Bill Ackman saying that he had to stop shorting the bond market because there's chances of recession out there and a lot of risk. How do you see it?
Yeah, thanks for having me on, and thanks for the question about bond yields. Obviously, that was one of the big stories today. I can't get inside Bill Ackman's head or his decisions, but I do think that the question that investors should be asking themselves is really what is driving these movements in rates? Is it a recalibration on what you think the economy is going to be doing, or is it sort of a break in faith of what you think the government is doing on the federal deficit? So, you know, on the one hand, you've got an economy that's doing fairly well, and that's been pushing rates up. But then there's been fear about what's going on with the government, and that's been influencing rates as well. I think, you know, with the 10-year hitting a 5% today, that's the highest level in two decades. That's obviously very high, but we think corporations can handle that. We think the U.S. consumer can handle that. We actually think we're close to the top in rates, and that generally we're going to be moving down over the next 3 to 6 months.
So would you be buying bonds, Terry?
Well, it's interesting. It depends on the question of how you want to buy bonds. So what we recommend and what we're doing for clients is to, you know, what a lot of people have been doing is investing in those 3 to 12-month Treasury bonds where you can get 5%. But now that we're watching the yield curve sort of uninvert, which is great, I think that's very good news, and we're watching the longer end of the curve move up, I think it's time to start locking in that 3 to 5 year time frame on the Treasury bonds and get that 5% yield for a little bit longer. And that's how we would be playing bonds.
Yeah, we heard that from a lot of investors, that if you are close to the top, then you want to lock in these rates for a longer period. And even a lot of people talking about the 10-year. So it does create a lot of opportunity. But I suppose if you're thinking about recession coming and tough times ahead in geopolitics, then, you know, you've got to worry about stocks. How does this, you know, change your thinking about equities and other risk assets?
Yeah, there's a lot to unpack with those comments and that question. I mean, I think let's just start with the first thing with the 10-year Treasury at 5%. We're not quite ready to lock in for that long. We just think you might as well take those shorter rates and then assess down the road where you want your money to be. But you also touch on geopolitics and what's going on, and particularly, you know, we had Russia and Ukraine that's been dominating for a year, and now very recently with Israel and Hamas and the violence there, and that's absolutely influencing stocks in terms of uncertainty, interest rates in terms of pushing yields up, oil prices, you know, pushing those up. That's translating into higher mortgage rates. That's pressuring international stocks, and all of those are pretty significant and pretty sharp, and that's what's been driving the markets most recently. And we don't think that goes away too soon. We're unclear how long that's going to last, but how does that translate into stocks? Well, that's, you know, what we're going to, you know, understand over the next week or so, particularly in the context of earnings, because earnings are going to be coming out. We're going to get a lot of information on that, and that's going to act as a big news cycle, I think, in addition to the geopolitical conflict that's going on. And we actually think that we're going to start to see some positive tailwinds when it comes to earnings in terms of outlook and looking forward. So we're hopeful that that's going to help the stock market going forward.
One of the reasons that Bill Ackman is covering his bond short, or has covered it, was because he says that the economy is slowing more than recent data suggests, Terry. How would you come to that conclusion? What other data can you look at to give you that impression? Bill Gross also says we're going to see a recession in the fourth quarter.
Well, I think that, I mean, we wouldn't be surprised at all if we see a recession in the fourth quarter, and I don't think that with all due respect to Bill Gross and Bill Ackman, I don't think that that's a bold statement at this point. I mean, I think that there's been a lot of people that have been calling for a recession in the second half of 2023. We've been, sounding a similar alarm bell, and I think that the inverted yield curve has been the clearest yardstick for that. But when you look at all the fundamentals of all of the money that's been sloshing around in the economy, or was injected, I should say, during COVID, and that sort of the spigot stopping on that's going to put the brakes on the economy. Now, is it going to be, the question we've been asking, and is it going to be a hard landing or more of a bumpy landing? And we're currently in the camp that it's going to be bumpy unless the Fed keeps raising rates. We don't think that they will. If they do, that'll probably be a harder landing than we're planning on right now. But I do think that a slowdown, over the second half of 2023 is likely going to happen. But stocks are going to be looking forward into the first quarter of 2024 and into that, those earnings periods.
So I heard a few more people talking about the real value in the 60/40 now, because finally, if yields have topped and bonds go up, it'll give value and risk trades, a second life. And I guess if you think about it, if you can get protection in the bond market, you can be a little bit bolder in equities, right?
Yeah, I think, I don't know if okay, the 60/40 portfolio, I mean, I'm not sure that a set it and forget it 60/40 is a great solution anymore for investors, and there's a bunch of reasons for that. But I do think what you're pointing out is that balance, taking a barbell approach of taking some risk in equities, particularly if we're going to start to see some decent earnings coming out right now, as well as holding out, as we pointed out, short to even medium-term treasuries in the 5% range. That's a great way to structure a portfolio right now. We think that balances out the risk very nicely, gives you a lot of upside potential while creating a really nice cushion for your portfolio. So we're absolutely in favor of that sort of balanced barbell approach that you're describing between risky stocks and the bond market. We buy bond ETFs, if that's what you're suggesting, where we think direct investments in treasuries.
You think yields have topped, and then the actual value of the bond. Terry Spath, founder and CIO of Zumo Wealth.
Now, your 3-day weather forecast on Bloomberg 960.
We're expecting partly to mostly cloudy sky conditions for tonight and patchy fog as possible late. Low temperature 50 from 45 to 50 just inland. For Tuesday, becoming mostly sunny, 65 to 75 in the Bay Area, 70 to near 80 inland. Back to more clouds around Tuesday night. And Wednesday and Thursday, patchy morning clouds, then sunshine. High temperature on the cooler side in the 60s. This is Gary Guest with your 3-day weather forecast on Bloomberg 960.
Get the news you need to start your day in just 15 minutes.
The latest headline on the war between Israel and Hamas.
Continuing to follow the trial of Sam Bankman-Fried.
Wake up with Bloomberg Daybreak, U.S. edition.
The latest developments on the battle for the Speaker of the House.
Really fascinating jail alert. Available now on your podcast feed. Weekday morning at 6 a.m. Eastern. The United Auto Workers strike drags on. Subscribe to Bloomberg Daybreak, U.S. edition today on Apple, Spotify, and everywhere you get your podcast. Bloomberg Radio. Context changes everything.
The Wheel, a big idea that's inspired countless new ones. From the horse-drawn carriage to a rover on Mars. 30 years ago, State Street launched the Spider S&P 500 ETF, SPY. A big idea that inspired the world to invest differently, and still does. What can you do with SPY?
Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit ssga.com for prospectus containing this and other information. Read it carefully before investing. SPY is subject to risks similar to those of stocks. All ETFs are subject to risk, including possible loss of principal. Alps Distributors, Inc. Distributor.
Bridge Bank knows the ins and outs of business ups and downs by providing flexible financial solutions to business owners of small to mid-sized companies across a variety of industries throughout the Bay Area. Bridge Bank is deeply rooted in the business community and part of a network of professional service providers, business managers, trusted advisors, and entrepreneurs. Visit bridgebank.com. Be bold. Venture wisely. Bridge Bank, a division of Western Alliance Bank, member FDIC.
No company wants to be involved in an international dispute. But when disagreements arise, you need expertise at your side. Take a closer look at ICDR, the International Center for Dispute Resolution. Backed by the longevity and strength of the American Arbitration Association, the ICDR is the world's leading provider of cross-border dispute resolution services, handling more cases than any other institution. Find out why global expertise matters. Visit ICDR.org.
Access a vast selection of global fixed income securities at Interactive Brokers Bond Marketplace. Search their deep availability of over 1 million bonds globally. IBKR has no markups or built-in spreads and low, fully transparent commissions on bonds. IBKR displays the highest bids and lowest offers received from the electronic venues they access. In addition, clients can interact with each other by placing bids and offers online to execute their trades. Learn more at ibkr.com/bonds.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Wall Street Week podcast, a conversation with Fed Chair Jay Powell. How could the economy be this resilient given all of his rate hikes?
We certainly have a very resilient economy in our hands. We've got the economy growing strongly. If you think back a year, many forecasts called for the U.S. economy to be in recession this year. Not only has that not happened, growth is now running for this year above longer run trend. So that's been a surprise. People getting high nominal wages, and as inflation has come down, real wages, which is spurring spending. And we also had inflation coming down. So, and that's going to much stronger demand. There may be some ways in which the economy is less affected by interest rates. It's hard to know precisely, but for example, many companies, any company with bond market access will have termed out its debt, right? And therefore may not be feeling the effects of higher rates. The same may be true of homeowners who have a long-term fixed rate, low rate mortgage, who then are therefore not, because it's not an adjustable rate or a higher rate, they're not feeling that increase in rate. So the economy may be somewhat less susceptible to the effects of rate increases. On the other hand, if you look at interest-sensitive spending, these are very much the place where we expect to see induced effects.
Hear the full conversation on the latest edition of the Bloomberg Wall Street Week podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Very slight increase at the open. Trading dominated by bond swings in the U.S. session. Futures pointing to gains in the U.S. too, although with the caveat that it is very early. The Shanghai Composite Index has been sliding too. It's been threatening to breach technical support, so traders will be watching out for that today. So back to those bond moves then. The yield on the 10-year rose 11 basis points at one point. It hit 5.02%, and then it finished the session at 4.83%. That is nearly a 20 basis point move lower. It was really a stunning move today. And then individual stocks also on the move. Steel news sending some stocks lower. Chevron down 3.7% after announcing it's acquiring Hess. Intel down 2. Nvidia is building some chips to compete with Intel. And then the best performers were some leisure stocks like MGM and Airbnb. They did well, along with a host of names that HSBC initiated coverage on. And of course, the coverage for the most part was